Hey everyone, welcome back to Corporate Decoder. Today we're diving into P2 Solar's latest report, and let me tell you, it's a bit like a roller coaster, a lot of ups and downs. Hopefully more ups in the future though, but as always, let's dive in and see what's going on. Let's start with the basics. As of February 14th, 2025, P2 Solar had nearly 68 million shares out there in the world. Now let's get into the real meat of the report, the unaudited financial statements for the last 9 months of 2024. First up, the balance sheet as of December 31st, 2024. Their total assets are about $102,000 compared to about $114,000 back in March. Total assets include what they own like cash, accounts receivable or what people owe them, and also intangible things like goodwill, which is the value of a company's brand and reputation. Unfortunately, their cash position isn't great, almost $0 compared to $213 back in March. It's important to keep in mind that they are an emerging growth company, which means they are still growing. Accounts receivable, how much people owe them, dropped quite a bit from almost $12,000 to just $47. Other receivable, which is money owed to them for other reasons, stayed fairly stable around $8,300. One thing that stayed the same was goodwill, still around $90,000. It's basically the value of the company that's not in physical things. Now let's switch gears to the other side of the balance sheet, what P2 Solar owes and how much stock they've issued. They call it liabilities and stockholders deficiency. The total current liabilities, what they owe in the short term, is almost $1.9 million, which is a bit more than the $1.8 million in March. This includes things like accounts payable, how much they owe to suppliers, accrued interest they owe and haven't paid yet, and notes payable, short-term loans. They also have something called contingent consideration liability. This is money they might have to pay depending on how well a business they acquired performs. Moving on to the stockholders part. It's not a pretty picture. Instead of having equity, they have a total deficit or negative amount of $1.86 million. This mostly comes from accumulated losses over time. Time to look at the income statement, how much money they made and lost. For the 9 months ended December of 2024, their revenue was about $26,000 compared to $154,000 the year before. It's a pretty big drop. Their gross profit, which is revenue minus the cost of goods sold, was $22,000, but way lower than previous $62,000. After subtracting operating expenses like salaries and rent, they had an operating loss of $74,000. That's how much money they lost just from running the business. They also had to pay interest, which added another $25,000 to the losses, and foreign exchange losses of about $46,000 as well. Bottom line, their net loss for those 9 months was $146,000. Still, it is less than the $101,000 loss of the year before. When you calculate all losses and income, they lost about $32,000, but that's still better than last year's loss of $143,000. The large swing from net loss is due to a $113,000 foreign currency adjustment, which can occur when a business has overseas holdings. Net loss per share was basically 0 cents, which means they didn't make or lose much per each share in the stock market. Now, the statement of changes in stockholders deficit. This shows how the ownership of the company has changed throughout the year. Most of the changes come from foreign exchange adjustments, which is how much their money is affected by changes in currency rates when doing business overseas, and net losses, which again reduce the amount of equity in the company. Let's switch over to the cash flow statement, how much money came in and out. It's like looking at the company's bank account for the 9 months. They had a net loss of $146,000, which is a big drain on cash, but there were some things that helped offset that, like changes in accounts payable, how much they owe to suppliers. In terms of financing, how they raised money, they got about $31,000. This came from money from related parties, basically people who are connected to the company, like owners or executives. Also, changes in currency rates gave them a boost of $28,000 at the end of the day. They are down $213. For additional info, they didn't pay much interest and had little to no income taxes. In this section, they give some background. They started out as a company called Spectrum Trading way back in 1990 and eventually became P2 Solar in 2009. On February 22nd, 2023, the company acquired all outstanding shares of Futricity Solar Inc., which specializes in solar installation. Back in 2015, they had a cease trade order, meaning they couldn't trade their stock, but that was partially lifted so they could raise some money. This is a crucial part. They admit there's substantial doubt about whether they can continue as a going concern, which is a fancy way of saying whether they can stay in business. Their ability to stay afloat depends on raising more money and making their business plan work, but there are no guarantees. This section explains the accounting rules they follow to prepare their financial statements. We will skip over most of that. Because the company deals with both Canadian and US currency, they have to follow specific rules for how to record money. The company has to estimate the value of some of their financial items. This involves maximizing the use of market observable data. We evaluate our reporting units on an annual basis, and if necessary, reassign goodwill using a relative fair value allocation approach. We evaluate our reporting units on an annual basis, and if necessary, reassign goodwill using a relative fair value allocation approach. On February 22nd, 2023, the company acquired all outstanding shares of Futricity Solar Inc., which generated goodwill of $90,254, CA'd $122,138. Contingent consideration is recognized and measured at fair value as of the acquisition date in accordance with AC 800-530-20. That's not all. The Futricity deal had a contingent consideration where P2 Solar has to pay extra money if Futricity hits certain goals, which might be a liability. The company is required to divide the net income loss by the number of shares they have. This goes deeper into the Futricity acquisition. The purchase price is based on 25% of Futricity's future operating income over the next 5 years, which is paid in cash. This part gets into the loans and convertible notes the company has outstanding. Convertible notes are loans that can be turned into stock. The promissory notes are due on demand, meaning the people they borrowed from could ask for the money back at any time, which means they could be risky. They bear a 5% interest. It means the company has dealings with people who are connected to it, like executives or directors, and in this case, they borrowed and repaid money to the director. They paid the director and officer a salary of $40,000 during those 9 months. The company has authorized 500 million common voting shares with a par value of $0.001 per share. The company has authorized 5 million shares of preferred stock with a par value of $0.001 per share. The most important part of the report, while it occurred in 2015, the cease trade order has been revoked after P2 Solar met the filing requirements. The company faces risks. As detailed in its annual report, these could affect its financial health. The CEO says their disclosure controls, or the system for making sure information is accurate, weren't effective. This is because they don't have enough people to properly divide up responsibilities and make sure everything is correct. Okay, so what's the big picture here? P2 Solar is a small solar company trying to make it in a competitive market. It has some serious challenges, including low cash, a history of losses, and questions about whether it can continue operating without more funding. On the plus side, it has a recent acquisition that could boost its revenue, and it is taking steps to address its financial control issues. And it just had its cease and trade order revoked. Their financial performance isn't great right now, the value of the company isn't all that high, and they've struggled to make a profit. Now, based on what we know, a fair value for the company might be in the range of $0.0005 to $0.001 per share, given these factors, with more weight toward the lower end. Overall, P2 Solar is in a tough spot, and while they're taking steps to improve, there's still a long road ahead. A small positive bias. If you want to see more videos like this, then be sure to subscribe and check out other videos on this channel.